Question number 2. Not given as a homework. Medical facility. One similar type of question we have done today. Medical facility. Do you remember? Let's do this question. Come on, fast. Question number 2. Miss Rakhi is an employee in a private company. She received the following medical benefits from the company during the previous year 24-25. In the end, examine the taxability of above benefits and allowances in the hands of Rakhi. So meaning she is given 6 benefits and allowances. You are supposed to say that whether they are taxable or not. If taxable, then how much? If not taxable, then why not taxable? Yes or no? You are supposed to say that. So, reimbursement of the following medical expenses incurred by Miss Rakhi on treatment of her self-employed daughter in a private clinic. Self-employed daughter, meaning the daughter is not dependent on her. See, spouse or children may or may not be dependent. For them, if the medical facility is received, can be exempt, provided the treatment is done in India in GRE. So the benefit is given for child, but the benefit is given for the treatment happening in India in GRE. Are they mentioning this? No, the treatment is done in a private clinic. If the treatment would have been done in GRE, then this benefit would have been exempt. But since the treatment is not done in GRE, the benefit cannot be exempt. It will be taxable. Hello? So 4,000 tick mark, taxable. Then on treatment of herself by family doctor. Ayyo. Again the treatment is done in India. But who is doing the treatment? Treatment is happening in GRE? No, treatment is happening by family doctor. Then also it will be fully taxable. Tick mark. Next one. Treatment of her mother-in-law. Mother-in-law cannot be a specified patient only. So even if the treatment is done in GRE, still it will not be exempt. Furthermore, the treatment is not happening in GRE also. So one, the patient is also not a specified patient and the treatment is also not happening in GRE. Then this benefit cannot be exempt. This will be fully taxable. Yes or no? So how much will be the medical facility taxable for her? 4,000 plus 8,000 plus 5,000. Yes or no? This will be fully taxable for her. Next one, payment of premium on Mediclaim policy taken on her health. So whatever medical insurance policy premium for yourself the employer is paying, that is a fully exempt perquisite for you. Nothing taxable. Cross mark. Medical allowance given, that will be fully taxable, huh? Because a fixed amount is given on a regular basis to meet your medical expenses. That will be taxable because that may or may not be used for treatment, etc. Hello? And if I would have been your examiner, in the bracket I would have given out of this medical allowance, rupees 1800 per month is spent. Underline. Bullshit. Why? Because this medical allowance is fully taxable. Out of this, whatever you are spending, on the basis of that, you are not going to get any exemption or deduction. That is just given to confuse you. Getting my point? This will be fully taxable. Will you remember? So this 24,000 will be taxable over here. First one is 12 plus 5. 17,000 taxable here. There will be nothing taxable here. There will be 24,000 taxable over here. Hello, sir. And medical expenses reimbursed on her son's treatment in a government hospital. Thank God, now the treatment is happening in India for a specified patient also, and the treatment is also happening in government hospital, GRE. Then the benefit will be fully exempt. Nothing will be taxable here. Nil. Next, expenses incurred by company on treatment of her minor son abroad, including stay expenses. So treatment is happening outside India. Treatment cost as well as stay cost of the specified patient is incurred by the employer. This will be exempt. Cost of treatment, cost of stay will be exempt to the extent of RBI limit. Hello sir, RBI limit given? See note, limit prescribed by RBI for expenditure on medical treatment and stay abroad is US $250,000 per financial year under liberalized remittance scheme. Meaning $250,000. Even if you multiply it by today's rate, the amount will be in lakhs. So the limit for spending is in lakhs. RBI limit is in lakhs. Your employer is giving you the benefit within the limit only, no? 1,05,000 only. That 1,05,000 is very less as compared to the limit, if you see. So within the limit, within the RBI limit only you are getting the benefit, that benefit will be fully exempt. Nothing will be taxable here also. Nil. Got it, friends? Next one. Expenses in relation to foreign travel of Rakhi and her son for medical treatment. Either this will be fully exempt or this will be fully taxable. Treatment done outside India, cost of stay, cost of treatment, exempted as per RBI limits for patient. But for one attendant and patient and one attendant, cost of travel can be fully exempt also, can be fully taxable depending on the GTI. So if Rakhi's GTI happens to be 2 lakh or less, then this 1 lakh 20 will be fully exempt. If her GTI happens to be more than 2 lakhs, then this 1 lakh 20 will be fully taxable. So what to be done? They have not told us anything. They are just saying examine the taxability. We are examining only. We will write down that if Rakhi's GTI happens to be more than 2 lakhs, then this 1 lakh 20 will be fully taxable. If Rakhi's GTI happens to be less than or equal to 2 lakh, then this 1 lakh 20 will be fully exempt. That you are just going to write. Getting my point, everyone? Understood? So this was your question. X is employed with AB Limited on a monthly salary of 25,000 per month. Did you see something? Did you notice something? Meaning this is monthly amount, no? Then why are you writing per month? Either write down 25,000 per month or write down monthly salary 25,000. We will understand, no? See, monthly salary of 25,000 per month. Thank God you told us it is per month. Otherwise, you are not going to understand only. Yo, monthly salary of 25,000 meaning 25, hello. Or if they are saying 25,000 per month means monthly salary only. They are writing both the things. Monthly salary of 25,000 per month. Wow, very good. Smart people there. Come on, let's see. Entertainment allowance and commission of 1,000 per month each. Wow, 1,000 per month. Entertainment allowance, 1,000 per month. What? Commission also. So first of all, can I say 25,000 into 12 will be her basic salary? So 25,000 into 12 will be 3 lakh. So her basic salary taxable will be 3 lakh. I will just write down the taxable amounts. Okay, no? Then 12,000 entertainment allowance will also be taxable for her. And 12,000 commission will also be taxable for her. But wait, if she is receiving entertainment allowance which is getting taxed, but for that entertainment allowance, will she get any deduction under 16 clause 2? But for that we'll have to first see that whether she is following 115 BSE or not. So they are saying shifting out of the default tax regime, meaning she is not following 115 BSE, meaning that she is eligible to get exemption. But that exemption is available, she is eligible to claim deduction. But that deduction for entertainment allowance will be available only if you are a government employee, no? You are not a government employee, hello. You are the employee of AB Limited, non-government employee. So non-government employee, only entertainment allowance will be taxable, but 16 clause 2 deduction will not be available. Why? 115 BSE is not followed. You could have got, but you are not a government employee. That's why you are not getting it. But if you would have been a government employee, you would have definitely got this deduction also, because you are not following 115 BSE. Getting my point? Should I move ahead? Commission is fully taxable. And this commission, my dear friends, is it a turnover commission or a fixed commission? Nothing given, sir. So we'll have to assume. I'll give you a tight slap if you'll assume. Per month means fixed amount on a regular basis. This is a fixed commission. This is not a turnover commission. Getting my point? Hello? Fixed or turnover, what difference will it make? It is going to tax only, no? But sometimes you have to take, in calculation, you have to take turnover commission also. That time you are not going to take this commission because this is not turnover, this is fixed commission. Getting my point? Next one. A company owned accommodation is provided to him in Delhi. Okay. Company owned accommodation. Meaning a non-government employee getting accommodation which was owned by the company in a place called Delhi, which has the population of more than 40 lakhs. So we know that from this she'll get a benefit of 10% of salary. But wait, salary will be calculated at the end. So the value of this benefit will be calculated at the end. Yes or no? We just have to take 10% of salary. That is the taxable value. Got it? Next one. Furniture costing 2,40,000 was also provided on 1st of August 2024 along with this accommodation. So we will not just calculate this amount. Along with that we will add what? 2,40,000 into 10% per annum of the actual cost of the furniture. Yes or no? And then in that we will do from August the furniture is given, no? So April, May, June, July, 4 months you forget into 8 upon 12. So this will be the furniture value. Accommodation has to be calculated. Both added will get the taxable value of this perquisite. Yes or no? But this will happen in the end. Okay. Should I move ahead? Next one. A personal loan of rupees 5 lakhs on 1st July 2024 on which company charges interest 6.75% per annum. The entire loan is still outstanding. Assume SBI rate of interest is 12.75. Can I say concessional interest, concessional loan provided by the employer? 5 lakh. And wait, this 5 lakh will be outstanding for all the months. Because repayment is not happening monthly. Repayment will happen after a year. So every month of the previous year, starting from July. Why? Because loan only is taken in July. There was no loan taken in April, May, June. For 3 months, there is no loan. So no interest benefit. Interest benefit will arise the moment you take the loan, no? From July only. And July month, how much is outstanding as on the last day of July? 5 lakh. On that, how much is the benefit? 6%. 12.75 minus 6.75. Hello? Into 1 by 12. And that same calculation you are going to do 9 times. Or for 9 months together. Do it for 9 months together. So what are you going to do? 5 lakhs into 12.75 minus 6.75% into 9 upon 12. Please don't commit these kind of silly errors in calculations. Okay. Now tell me. 5 lakh into 6% into 9 divided by 12 will give you 22,500 taxable value of this perquisite. So the taxable value of this perquisite will be 22,500. So along with basic, along with entertainment allowance, along with commission, this amount will also be taxable under the salary head. Yes or no? One more amount is taxable that we are going to calculate. And then we are going to write here. Fill in the blanks. Done? Next one. His son is allowed to use a motorcycle belonging to the company. The company had purchased this motorcycle for 60,000 on 1st May 2021. The motorcycle was finally sold to him on 1st August 2024 for 30,000. This is a beautiful adjustment. Mark this adjustment important. Because here two benefits are there. One, use of movable asset benefit is also there. And that movable asset which was already used by you, already under use by you, that is during this year sold also to you. Getting my point? See, I will draw a small timeline so that you understand. Okay. Motorcycle was acquired by the company on 1/5/2021. So on 1/5/2021, the motorcycle was purchased and the actual cost of that motor car was 60,000 to the employer. Now employer gave this motorcycle to the employee so that his son can use. Let's say from that same day it was given for use. So from that day only it is used by the employer in his business. How come used by employer, sir? Employer has given this motorcycle to his employees for use, meaning the employer is using in business to give to the employee. Yes or no? Now this is used by the employee. Tell me, as on 1st April 2024, meaning first day of our previous year, this motorcycle is still used by the employee's son. So from 1st April of my previous year, there will be use of motorcycle benefit accruing to the employee. So April, May, June, likewise till 1st August. Meaning that on 1st August 24, this same motorcycle was sold to the employee. So on 1st August 2024, sold to employee for how much? 30,000. Getting my point? Now here there is one benefit and one more benefit is there. For this period, it is a benefit by using the motorcycle. So here also there is one benefit. Here it is use of movable asset. Hello? And that use is for how many months? April to July. 4 months. So what is the actual cost? 60,000. Actual cost into 10% per annum is the benefit, no? By using. So 60,000 into 10% into 4 by 12 because use is only 4 months. So 60,000 into 10% into 4 upon 60,000 into 10% into 4 divided by 12 will give you 2,000. This 2,000 will be taxable value of perquisite by using the motorcycle. Now this motorcycle was sold on what date? 1st August 2024. Can I say till 1st August 24 it was used by the employee? Meaning it was used by the employer in his business, given to the employee, yes or no? So starting from 1st May 2021, can I say 1st May 21 to 30th April 22, it was used in the business of the employer because it was given to employee for using it, yes or no? Then from 1st May 2022 to 30th April 23, this second year also it was used in the business of the employer because for this period also it was given to employee for using it. Then from 1st May 2023 to 30th April 24, third year also it was used in the business of the employer. And my dear friends, 1st May 24 to 30th April 25, fourth year it could not be used for the full year because between these two dates on 1st August 2024 it was sold to employee for how much? 30,000. Getting my point? So now what I will do? I will take the actual cost. Which was 60,000. Now from that actual cost, I will reduce the depreciation for 3 completed year of use. 1, 2 and 3. For the 4th year or the fraction of that year, I will not take any wear and tear. Getting my point? So now wear and tear will be at what rate? 20% WDV, 50% WDV or 10% SLM? It will be 10% SLM. Why? Because the asset sold, movable asset sold is not computer, laptop or electronic gadget and it is neither motor car, it is motorcycle. So it will be eligible for 10% wear and tear on SLM basis. So first year 10% of 60,000 will be 6,000. Second year also 6,000 and third year also 6,000. So 18,000 I will reduce and I will get 42,000 value. Can I say the value of 42,000? Motorcycle has a value of 42,000. That motorcycle was given or sold to the employee for only 30,000, there is a benefit of 12,000. Got it? So please pay attention. Here by use benefit is 2,000 and transfer or sale of movable asset, the benefit is 12,000. How did we calculate these two amounts? Did you understand? So both these amounts will be taxable under the head salary. Everyone, this is also taxable, this is also taxable as salary. Yes or no? Professional tax paid by Mr. X is 2,000. For that, he will get deduction under 16 clause 3. Done. Because he is also following, he is shifting out of 115 BSc. If he is not shifting out, then this 16 clause 3 will not be allowed. Getting my point? Hello? Now tell me, did you get all the taxable amounts? Now in your salary, these yellow colored amounts are taxable. Salary statement. Out of these amounts, which amounts will be treated as salary for the purpose of valuing the perquisite? 3 lakh will be taken as salary because it is a basic salary. On your calculator, take 3 lakhs. Take 3 lakhs. 12,000 rupees was entertainment allowance. This is not exempt allowance. This is taxable allowance. Taxable allowance we are supposed to take. And commission also we are supposed to take. So 3 lakh plus 12,000 plus 12,000. We are not going to take the value of other perquisites. So 22,500 is the value of other perquisite. 2,000 or 12,000 is also the value of other perquisites. We are not going to take those benefits. So on your calculator, are you having 3,24,000 of salary? And on the basis of this 3,24,000 of salary, the accommodation facility will be valued. 3,24,000 into 10%. Did you get this? So 10% of 3,24,000 will be 32,400 and plus 2,40,000 into 10% into 8 divided by 12. For furniture, it is 16,000. 16,000 plus 32,400 will give you 48,400. And my dear friends, this 48,400 is rent-free furnished accommodation. Accommodation value is 32,400 and furniture value 16,000. Both taken together, 48,400 will be the taxable value of accommodation facility. Understanding? On your calculators now, please. 3 lakh plus 12,000 plus 12,000 plus 48,400 plus 22,500 plus 2,000 plus 12,000. Tell me the gross taxable salary now. 4,08,900. 4,08,900. This is the gross taxable salary. And out of that, are you going to get any deduction? Yes, standard deduction you are going to get only 50 because you are not following 115 BSc. And 16 clause 3, 2,000 will also be allowed, no? So you are going to get the total deduction of 50,000 standard deduction and 2,000 professional tax. Please total. So 4,08,900 minus 52,000, you are going to get 3,56,900. This is the net taxable salary. Compute the income from salary. This is the income from salary. Got it, everyone? It is just a matter of presenting these things in the statement now. Have you understood the entire question and how the things are coming? Sure? Did you commit mistake anywhere? Now you realized that these mistakes are not to be done. Understanding? Perfect. Very good. Seventh question. Okay, seventh question. I told you all to calculate assuming that what if he shifts out. So what is your answer in that? Come on, tell me. Give me the answer. Did you solve this question, Kaushik? Seventh question, assuming that he is shifting out. What is your answer? Come on, tell me. Final answer. 620 will come. 420 will also come. 75 will also come. 9,000 will not come. 9,000 will come as taxable, but you will not get deduction, or you will get deduction. No, you are not going to get deduction because you are not a government employee. Then medical expenses reimbursed, 18,000 will come. 4,000 professional tax, now you are going to get the deduction for professional tax, yes or no? Then health insurance premium not to be done, gift vouchers to be taken. Then on your calculator, please, 6 lakh 20. Take on your calculator 6 lakh 20 plus 4 lakh 20 plus 75 plus 9,000 plus 18,000. Now plus 2,000 professional tax paid by the employer. Then plus 10,000 plus 26,000 also plus 39,600 and plus 7,000. On your calculator, you must be getting 12,26,600 only. Getting, no? Now 50,000 standard deduction you will take, and you will also take the deduction for professional tax 4,000. You will not take any deduction for what? 16 clause 2 entertainment allowance, because you are not a government employee. Done. So after 1226 600, you will reduce 50,000 and you will also reduce 4,000 professional tax paid. So what will be your total now? 1226 600 minus 54,000, 11,72,600. Everyone getting this answer? Sure. Perfect. Come to question number 6. This is a question on PF. Let's see. Mr. A retires from service on 31st December 2024. So he is retiring on 31st December 24. After 25 years of service, okay. Following are the particulars of his income, investments for the previous year 24-25. He is getting basic salary of 16,000 per month for 9 months. Sir, why 9 months he will get? From April till December only he is into employment, no? So from April to December, 9 months only he is going to get the basic salary, no? Hello, sir? Because on 31st December when he will retire, after that he is not going to get any basic or any allowances, etc., no? So for first 9 months he is going to get what? Basic salary in this year. Then dearness pay, meaning dearness allowance, is 72,000. How that 72,000 is coming? They are saying that this dearness allowance is 50% forms part of the retirement benefits. And that dearness allowance is 88,000 per month for 9 months. 8,000 into 9 will give you 72,000. But out of that 72,000, 50% forms part of retirement benefit, means 50% is in terms and balance 50% is not in terms. 36,000, 36,000, 36,000 in terms, 36,000 not in terms. Hello? Both are taxable. So basic salary also taxable, DA is also taxable, in terms, not in terms, both are taxable, yes or no? And lump sum payment, put a star mark on this. Lump sum payment received from the unrecognized provident fund. How much is that lump sum payment? 6 lakh. Now out of this 6 lakh, whatever will be the employee's contribution will be ignored. Interest on that employee contribution will be taxable under IFRS. But out of the 6 lakh, whatever will be the employer's contribution and interest thereon will be taxable under the head salary. Yes or no? Just now we have discussed, no? So deposit in the PPF account. See, whenever you deposit some money in PPF, PPF means Public Provident Fund account. So money is coming or money is going. You are depositing money, meaning the money is going, no? That is not your income, that is your investment. So this investment happening in PPF account, Public Provident Fund account, will allow you to take deduction under ATC. So for this, you are going to get deduction under ATC, PPF account deposit. Hello, sir. In ATC, we are going to see this amount again. So in this year, whatever amount you are investing in your PPF account, the PPF account of your spouse, PPF account of your children, that entire amount which you have deposited in this year will be allowed as a deduction under ATC, subject to limit of ATC. Getting my point? So this is your contribution, your deposit, your investment in PPF is not your income. It is investment. It is deposit. Money going out will allow you to take ATC deduction. Getting my point? Now they are telling that out of the amount received from the UPF, meaning that they're talking about the 6 lakhs now. Out of the amount received from UPF, they're talking about the 6 lakh. Okay. The employer's contribution was 2 lakh 20. Interest thereon was 50,000. Don't you think that this 2 lakh 20 and 50, 2 lakh 70 entirely will be taxable under the head salary as profit in lieu of salary? Hello, sir. Understanding? Now tell me. Now what I will do? The employee's contribution was 2 lakh 70 and interest thereon 60. No need to tax employee's contribution because this is already considered as salary in the earlier years. Hello, already taxed. Now coming back to you will not be your income. But interest on this amount amounting to rupees 60,000 will be taxable as your income from other sources. Getting my point? Now what is the taxable portion of amount received from the UPF in the hands of Mr. A? They are just asking you that. Then why other details are given? Just to confuse you. They are telling you, they are asking you what will be the tax treatment of the 6 lakhs. So out of the 6 lakh, 2 lakh 20 and 50,000, employer's contribution and interest thereon will be taxable under the head salary as profit in lieu of salary. 2 lakh 20, sorry, 2 lakh 70, employee's contribution coming back to him will be ignored. Not taxable anywhere. Not an income only. 60,000 interest on employee's contribution will be taxable under the head IFRS. That's it. See the solution. Got it? But wait, in your question only, write down one thing. In the question only, can you see the blank space? Use this blank space and write down what I am dictating you. Also compute taxable income under the head salary and total income of the employee of Mr. A. So what will you do now? Come on, tell me. They're telling you to calculate taxable salary also and total income also, meaning that they want you to take this IFRS also, GTI, take the ATC deduction also, total income. Getting my point? Give me the answers. Come on, fast. In that question, write down one more line. Assume that employee is not following 115 BSc, meaning he is shifting out from 115 BSc. Yes or no? Computation of total income. First of all, to compute this total income from salaries you have to take. So income from salaries. First thing is basic salary, which was how much? 16,000 into 9. And that amounts to 1,44,000, outer column. Second one is dearness allowance, and it is in terms also, which is 1 lakh, sorry, which was 72,000 into 50%, and not in terms also. I will write down like this. Wait, I will write down like this. 8,000 per month into 9 months. This will be 72,000 and 50% of that. Again, 8,000 per month into 9 months, 72,000 into 50%. And this will be 36,000. This will also be taxable. And this 36,000 will also be taxable. Next, what he is getting? Lump sum payment. So what you are going to write down? Accumulated balance from UPF account to the extent of what? Employer's contribution and interest on employer's contribution. Why you are writing that under the salary head? Because it is profit in lieu of salary will be taxable under the head salary. Okay. So employer's contribution was 2,20,000 and interest was 50. So here it will be 2,20,000 and interest is 50. Okay. Now anything else given by the employer? No. Everything given total. So 1,44,000 plus 72,000 plus 2,70,000. $4,86,000 you should get. This 4,86,000 is your taxable income under the head salary, income from salary. Yes or no? This is income from salary. Put A in front of this. This is income from salary. Now only this income you are getting in this year, or other head income also you are having? You are having other head income, no? Income from other sources. So you will write down second head of income. Income from other sources. And under this you will write down interest on employees' contribution to UPF account received as a part of accumulated balance from UPF, and that amount was 60,000. No, so this 60,000 will now be your income from other sources total. But wait, we are yet to do something, because see, the salary which we have calculated, there was a mistake over here. What mistake was there? Because out of 4,86,000 we were supposed to take the standard deduction also, which we forgot to take. So standard deduction will come, no? This is your gross taxable salary. This is your gross taxable salary. And out of this I will take standard deduction under section 16 clause 1A, and the amount will be 50,000 friends. Why 50? Because you are not following 115 BSE. Done no? Now there will be net taxable salary. Total will be 4,36,000. This 4,36,000 will be your A. This will be your salary income, salary head. Now write down IFOS here. Now it is okay. Now IFOS will be total how much? 60,000 only, no? Only one income under the head IFOS. B. Any other head of income can you see in the question? House property, capital gain, PGBP, no, na? So all other heads nil. You have only these two heads. Now from these two heads, what are you going to do? Total. The total will be gross total income, A plus B. So it will be 4,96,000. Everyone got this? Out of this you are going to get deduction under section ATC, PPF deposit. So ATC amount maximum deduction is 1,50,000. How much is your PPF deposit? More than 150 or less than 150? Less than 150, no? PPF deposit. Check how much was PPF deposit. 40 only, 40,000. So 40,000 is within the limit of 1,50,000 because under ATC you cannot take the deduction more than 1,50,000. Yes or no? So full 40,000 you can take as deduction because it was within the limit of 1,50,000 ATC limit. Now do the total. You will get 4,56,000. This is your total income, my dear friends. And see, they will tell you to calculate the tax liability also on this. This type of small case study can be there in your exam. And from this case study, they will make small MCQs. 2 plus 2 plus 2, 6 marks. And if not case study, this question can come independently also. Ayo sir, we saw the same question in the ICAI study mat. We did the same thing, still we did not get the mark. Why? Because same question they will give. But they will change the required part now. Required part in that ICAI study mat is what? Tell me, what is the required part? Only tell what will happen with the lump sum, that's it. But what if they are twisting the same thing, they are twisting and telling you to calculate the taxable salary? Then you stop here. Then you stop here. That's it. But what if they are telling you to calculate gross total income? Then stop yourself here. What if they are telling you to calculate total income? Then take the PPF deposit as ATC deduction and stop here. This will give you full marks. But wait, they will go one step ahead and they will tell you to calculate the tax liability also. Come on. How will you calculate the tax liability? You will apply the tax rates. Which rates you will apply? 115 BSE you have shifted out. So 115 BSE shifted out. So normal tax rates you will apply. Entire income is normal income. Hello. On that you will apply the tax rate. Up to 2,50,000 basic exemption limit. 2,50,000 to 5 lakh. You are not going. 2,50,000 to 4,56,000. 2,06,000. On that you will apply 5%. That 5% will be your tax. And that tax you can claim as rebate also. Because your total income is up to 5 lakhs. Rebate will also come. So entire tax will go for rebate because the tax will be less than 12,500 only. Final tax liability will be nil. This type of question can come for 10 marks in the exams. Understanding, you just thank God that I don't set your papers for ICAI. If I'll set your papers, no, I will not allow you to pass also. Only those students will pass who read between the lines, who are serious in their studies, who know that what is asked, what I am understanding and what I am writing. If these things are not matching, no, forget about getting the marks in the exam. So first, what is asked? See that. Are you understanding what they are asking? Okay, very good. Now, give them that same answer which they are asking. If you write anything else, no, you are not going to get marks. Okay. Now this we have solved assuming that is not following 115 BSE. Same question. They will tell you assessee following 115 BSc. What will you do? Sir, this will remain same, 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 this will remain same. Only this will change. This will become 75,000. So sir, accordingly this will change. Sir, if this will change, no. So this will also remain same. Under the head IFOS will not change. IFOS will also remain same. Getting my point? Sir, this amount will change. So now instead of 436, what will be the total here? This will be 75,000. Hello? 75,000. And this will be how much? Reduce 25,000 more. This will be 4,11,000. This will be 4,11,000. Yes or no? And 4,11,000 plus 60 will give you how much? 4,71,000 as your GTI. And from that, if you will take the ATC deduction, you are gone. Because ATC deduction, chapter 6A, all the deductions are not available from your GTI if you follow 115 BSc. Then why are you taking this ATC? So this will not come, and ultimately your total income will also be 4,11,000. And on that, if they are asking you to calculate the tax, what you will do, you know, now you will not apply that tax rate which you have studied. Now 115 BSc tax rates will be applied. 115 BSc tax rates are different. I have already told you earlier that I have not yet taught you, which we are going to do with the total income questions. Getting my point? How miserable your life they can make. Just see. Understood? Should I move ahead? Sure? Perfect? Okay. Now, let's come to question number 7. See, in the question number 6 which we solved yesterday, in this question, this lump sum was coming from UPF, no? 6 lakh rupees. Do you remember this? And now in question number 7 they are saying, will your answer be different if the fund mentioned above was RPF? The answer is yes. If that lump sum on retirement is coming from RPF, then that lump sum will be fully exempt under section 10 subsection 12. All these 4 parts will not be taxable at all. It will be fully exempt, provided I am covered in those situations which we discussed in the last lecture. Yes or no? So, since the fund is a recognized one and the maturity is taking place after a service of 25 years, because in the question they have mentioned that, see, in the question they have mentioned that Mr. A is retiring after 25 years of service, meaning that after 25 years he is retiring and he is getting a lump sum. Lump sum from what? UPF? No. Now they are saying from RPF. So it was a service of 5 years or more, and after 5 years or more service, whatever lump sum you receive from your RPF will be fully exempt under section 10 subsection 12. Done, sir? So this question number 7 also done. Now coming to question number 8. Shall we start? Everyone, let's start now. Mr. B is working with XYZ Limited and has given details of his income for the previous year 24-25. You are required to compute his gross salary. What they are telling you to compute? Gross salary. From the details given below. Basic salary. Come on, tell me. Basic salary. Taxable or not taxable? Taxable, no? So 10,000 per month basic salary you are getting. For how many months you will get? 12 months. So this amount will be 1,20,000. So basic salary 1,20,000 will be taxable for you. Next one, come on. DA, 50% of the retirement benefit. 50% is for retirement benefits, meaning that 50% in terms and 50% not in terms. So what is the DA? 8,000. Out of that, can I say 4,000 into 12 and 4,000 into 12? 48,000 here in terms, that will be taxable, and 48,000 not in terms, that will also be taxable. Done, no? So these two things done. Commission as a percentage of turnover. 0.1%. And what is the turnover achieved during the year? 50 lakhs. So 0.1% of 50 lakhs will be how much? Come on, tell me. I guess it will be 5,000 only. 50 lakh into 0.1% will be 5,000. So 5,000 commission, turnover commission, will it be taxable? Yes, sir. Turnover commission 5,000 will also be taxable. Next one. Bonus 40,000. That will also be taxable, sir. Gratuity 25,000. Sir, gratuity, what do we do? Come on, tell me. Everyone. Gratuity is exempt, no? But the gratuity which you receive on retirement or separation is exempt, friends. Are they telling you that the employee is getting retired? So definitely this gratuity is not received on retirement. This gratuity is received while you are in service. It will be taxable, fully taxable. I told you while we were doing the gratuity stuff. Do you remember that? Any gratuity received while you are in service will be fully taxable, whether you are a government employee or a non-government employee. But the gratuity which you are receiving as a death cum retirement gratuity on your retirement or separation will be exempt under section 1010. So if you try to take the exemption of this gratuity, you are gone. Will you take the exemption or you will show this gratuity taxable? Taxable. So this will also be taxable. Next one, his own contribution in RPF. You are contributing 20,000 to your RPF account. Now tell me from where you will contribute this 20,000. Definitely you are going to contribute this out of your 1,20,000 of salary. Yes or no? So from your 1,20,000, if you are contributing this 20, 1,20,000 is already getting taxed. So will you tax this 20,000 again under the salary head? No. Because this 20 is already a part of 1,20,000, already taxed. Hello, sir. But for this, will I get any deduction under ATC from GTI? Yes, because the contribution from my salary is happening in my RPF. That will allow me to take the deduction under ATC. Yes or no? So I will write down for own contribution of 20,000. It will be ignored under the head income from salary, not to be again considered as a part of salary. Okay, no? And I will take deduction under ATC for this. Now see, in the examination, no, they could have given a little bit different details. This basic salary 1,20,000, they would have given that it is a net salary. They would have given this is a net salary after deducting your PF contribution. Then what you would have done? We always charge gross salary. So to get that gross salary, whatever PF contribution got deducted, we would have added that and we would have shown the entire gross salary. Then that amount would have been included in the net amount of salary to get the gross amount, and that gross amount would have been taxed. Hello? Right now, nothing is mentioned. That means this basic is entirely gross only, no? And from that gross only, this contribution will go. Getting my point? So no need to give another effect. No need to give effect again under the head salary because it is already a part of your basic. Yes or no? You will take the deduction under ATC. Next one. Now employer's contribution to RPF. It is 20% of your basic salary. Sir, how much is your basic salary? It is 1,20,000. So 20% of 1,20,000 will be how much? Come on, tell me. 20% of 1,20,000 will be how much? It will be 24,000, friends. So your employer's contribution to your RPF is 24,000. Yes or no? Now we have to check whether the employer is contributing up to that limit of 12% or not. So we will have to calculate 12% of salary, friends. So for 12%, salary means what? Basic, DA in terms, turnover commission. Yes or no? So do you have basic? Do you have basic 1,20,000? Take 1,20,000 on your calculator. Do you have DA in terms? Yes, 48,000 was DA in terms. Add 48,000. And do you have turnover commission? Yes, sir. Turnover commission is 5,000, sir. So total is 1,73,000. This is your salary. Now 1,73,000 into 12%, you will get 20,760. So 12% of your salary. Can I say 12% of your salary? 12% of salary means basic, DA in terms and turnover commission. 12% will be 20,760 friends. So is your employer contributing this much amount or less than this? No. Employer is contributing more than this. Check. No. He is contributing 24,000. Is he contributing more? How much more? How much excess he is contributing? 24,000 minus 20,760 will give you 3,240. So can I say, therefore, excess contribution by employer to your RPF will be 3,240. My dear friends, this will be your salary. Hello, 3,240 will be your salary and deemed to be received as per section 7 will be taxable in this year itself. Will you be able to calculate this amount like this? Sure, everyone? Very good. Now see, employer's contribution 24,000 ignore, 20,760 ignore. This will be just for the purpose of comparison. Yes or no? We have to take 3,240 as what? Taxable. Now interest is accrued in your RPF at 13% per annum. Wow, the amount is 13,000. Friends, can you tell me, if the interest is credited at the rate of 13% and the amount of that interest is 13,000, interest credited to your RPF at a rate which is less than or equal to 9.5% or more than 9.5%, it is more than 9.5%. So if at 13% this much interest is credited, at the rate of 9.5%, how much should be credited? Can you calculate? At the rate of 9.5%, it should have been 9,500 only. If 13% is 13,000, how much should be 9.5%? Can you cross multiply? On cross multiplication, you will get this 9,500. Yes or no? So how much excess interest credited to RPF? That amount is 13,000 minus 9,500. That will give you 3,500. Everyone got this? This 3,500 excess interest credited to RPF is also your salary. And as per section 7, deemed to be received in this year, it will also be taxable in this year itself. Hello friends, did you understand? So now on your calculators, come on. You will take 1,20,000 as taxable. On your calculator, please keep on adding all these items. 1,20,000. Then 48. DA not in terms. DA in terms 48. Add that. 5,000 turnover commission. Add this. Then add 40,000 bonus. Add gratuity of 25,000. Then you will add 3,240 excess contribution to RPF by the employer and add 3,500 excess interest credited. On your calculator, how much amount you are getting? Come on, tell me. 298,740. Please check. 292,740. 292,740 you should get, no? Please add the amounts properly. 292,740. Got it, friends? Done? Should I move ahead with the next question? This question is done. Okay? So how to present this question? The presentation will be the same, which is given here. Okay? Now let's move on to the next question now. Now come to question number 24. This question is very good question. Okay? Question number 24. Basic pay. Is it taxable? Yes. Dearness allowance? Taxable. Commission? Taxable. Entertainment allowance? taxable. Medical expenses reimbursed, taxable. Okay. Professional tax paid 2000, 1000 was paid by employer. So this 1000 which was paid by the employer is taxable for you. But in all, total 2000 is paid, no? So for this, you are going to get deduction under 16 clause 3. Provided you are not following 115 BSc. Done, no? Next one. Mr. Goyal contributes rupees 5000 towards RPF. Who contributes? Mr. Goyal, meaning the employee himself contributing. What will happen for this? Tell me. This will be allowed as a deduction under ATC, and he's contributing this amount out of his salary only, and salary is already taxed. Ignore this under the head salary. No need to give any other effect. Only take the deduction under ATC. He has no other income. Determine the income from salary. Very easy. If Mr. Goyal is a state government employee, he is a state government employee. So if he is a state government employee, is he going to get the deduction for this entertainment allowance also? Yes, 16 clause 2 also he will get. Okay. And how much deduction he will get for entertainment allowance? 1/5 of basic. 1/5 of 4 lakh will be how much? It will be 80,000, or actual entertainment allowance 40,000, or maximum 5,000, whichever is lower. 5,000 deduction he is going to get. Okay. And 75,000 standard deduction also he is going to get. So see, default tax regime he is following. Oh, if he is following default tax regime under section 115 BSc, then only 75,000 he will get. He will not get those two deduction. But if he is not following default tax regime, normal provisions he is following, then he will be getting first deduction and second deduction and third. All the deduction he will get, and his income will be 6,59,000, which you also got. Since the question was silent that which tax regime he is following 115 BSc or not following 115 BSc. Hence the solution is given in both the ways. Okay. So if you follow 115 BSc, then this will be your final answer. 6,41,000. And if you don't follow 115 BSc, then this will be, yes, this will be your final answer. Got it, sir? Easy. Mr. Balaji, employed as a production manager in Beta Limited. He is a private sector employee. Furnishes you the following information for the year ended 31st March 2025. His basic salary up to 31st October 2024 is 50,000. So from April to October, how many months are there? 7 months. 7 months he is getting a salary of 50,000. So 50,000 into 7 will be 3,50,000. He is getting as what? Basic salary. Then from November his salary becomes 60,000. So from November till March, can I say for these 5 months, he will get 60,000 into 5, 3 lakh rupees. So his total basic which will be taxable for him will be 6,50,000. This basic salary will be taxable for him during the previous year. Now his salary is due and paid on the last day of every month. Fortunately, we have done the correct thing. If they would have told you that the salary becomes due on the first of the next month, then what would have been the answer over here? Then last year's March we would have taken in this year. That time we were getting a salary of 50 only. And this year's March we would have taken in the next year, not in this month. No, not in this year. So we would have done 50,000 into 8 and we would have done 60,000 into 4. If it was given that the salary becomes due on first of every month. Getting my point? But fortunately that is not given. Every month salary becomes due as on the last day of that month only. So starting from April till March, whatever salary is there for this year becomes due in this year and will be taxable in this year only. Yes or no? Next one. DA is 40% of basic salary. So can you take out 40% of 6,50,000? Yes, sir. 40% of 6,50,000 will be 2,60,000. 2,60,000 DA he is getting. Now, bonus equal to 1 month salary paid in October 24 on basic salary plus DA. So now tell me, what was the basic for October? It was 50. What was the DA for October? 40% of basic. So 40% of 50, which is equal to 20,000. So 20,000 plus 50,000 is equal to 70,000. This is the basic plus DA for the month of October, which will be given to you as what? Bonus. And this 70,000 is taxable. So how much amount is taxable? See, this basic will be taxable. This DA will be taxable. This bonus will be taxable. Yes or no? Easy? Next one. Now, contribution of employee to RPF account of the employee at 16% of basic salary. Now, what was the basic salary? Come on, tell me. 6,50,000 was the basic. So, 16% of that. So, can I say contribution is 16% of basic, meaning 6,50,000. And that amounts to 6,50,000 into 16%, 1,04,000. So the employer actually contributes 1,04,000. Now we have to check whether he is contributing up to 12% of your salary or more than that. So for that we will have to calculate 12% of what? Salary. And for this, salary means what? Basic, DA in terms, turnover commission. Now please pay attention. In this question, they have not mentioned that DA is in terms or not in terms. And there is no hint also, because of which we can treat it as what? In terms or not in terms. Yes or no? So if nothing is given and no hint is given, we are free to assume anything. We are free to assume that it is in terms also. We are free to assume that it is not in terms. So here it will be more convenient for the purpose of calculations. It will be more convenient to assume that DA is not in terms, and which our institute has also done. In the solution, if you will see, no, the DA is assumed to be not in terms in the absence of any information. So what we are also going to do, we are also supposed to take DA not in terms assumption. Okay. So if DA not in terms is there, so first of all tell me, 12% we are supposed to take for basic plus DA in terms plus turnover commission. That will be the salary for the purpose of calculating 12%, no? For the purpose of calculating 12%, 12% of what? Salary. And salary means what? Basic, DA in terms, turnover commission. So what was basic, sir? It was 6,50,000. What was the DA in terms, sir? Nil. Because we are assuming that the entire DA is not in terms. Yes or no? And what is the turnover commission, sir? Nil. Fortunately, what did I say? Fortunately, this salary will also be equal to basic salary. Amounting to 6,50,000. Hello. So 12% of 6,50,000 will be how much? 78,000. So employer should have contributed 78,000. Everyone. Is he contributing 78,000 or more than that? More than that? How much? $26,000. So can I say 26,000 will be the excess contribution by the employer to your RPF account, and this amount will also be taxable under your salary head. Understanding? Sir, if I would have assumed that DA was in terms, then pay attention everyone. If you would have assumed that DA was in terms, then 6,50,000 plus DA you would have written. Understanding? So 6,50,000 plus how much was DA? 2,60,000 and It was 9,10,000. 12% of 9,12,000 will be 1,09,200. Hello, sir. So 1,09,200. Here we would have got what? If you would have taken 2,60,000 also, then the salary would have been something, and on that 12% would be 1,09,200. So is the contribution more than 1,09,200? The answer is no. If the contribution is not more than 1,09,200, then nothing will be taxable. Employer contribution 26,000, nothing will be taxable. Why? Because the contribution of 1,04,000 is within the limit of 12%. Hello, sir. In the question, are they telling you that what is DA? No, nothing is mentioned. So you are free to take any of the assumptions. Got it, sir? Should I move ahead? Next one. So then excess contribution would have been nil. Nothing would have been taxable. Both the answers I have calculated in front of you. Okay. Now professional tax paid 2,500, of which 2,000 was paid by the employer. First of all, this 2,000 which was paid by the employer will be taxable as your salary. And later on, this 2,500, for this you are going to get what? For this 2,500 you are going to get deduction under section 16 clause 3. Provided you are not following 115 BSc. Okay. Next one. Facility of laptop and computer was provided to Balaji for both official and personal use. Cost of laptop 45,000 and cost of computer 35,000 were acquired by the company on. See, company acquired laptop and computer. These laptop and computer are not sold to you. They are given to you for use. Facility of use is given. And did I tell you that if you are given any asset, any movable asset for use, that is a taxable perquisite for you, except laptop and computer. If the laptop or computer is given for use, that facility, that perquisite is fully exempt. So there is no need to take these two amounts. These will not be useful for us because the entire value is going to be what? Exempt. So here the taxable value will be nil. Everyone got this? Hello, sir. Okay. Were you able to identify this? Perfect. Motor car owned by the employer, cubic capacity engine exceeds 1.6 liter, meaning greater than 1600 cc, provided to the employee from 1st November 24, meant for both official and personal use. Repair and running expenses of rupees 45,000 from 1st November 24 to 31st March 2024 were fully met by employer. Use plus expense, both the benefits happening, minus recovery, if any. This amount will be fully exempt if the car is fully official. This amount will be fully taxable if the car is fully personal. But the car is partly official, partly personal. This amount will be ignored. A flat amount will be taxed. Did I tell you? How much? 1,800 or 2,400. In our case, it will be 2,400 per month. But wait, driver is also given? No, it was self-driven by the employee. If the driver was given, then I would have taxed 900 extra. Yes or no? So what I will be doing? I will be taking 2,400 per month into how many months? For the full year it is given, or November to March only. So November to March only 5 months. So benefit happens for 5 months only. So 2,400 into 5 will give you 12,000 rupees. This will be the taxable value of this perquisite. Done, sir? Okay, very good. Leave travel concession given to employee, his wife and 3 children, 1 daughter aged 7 and twin sons aged 3. Yesterday only we have done something like this. Twins after the first child treated as single. So all the children born on or after 1/10/98, and out of 3, 2 LTA for 2 can be exempt. But in our case, LTA for all the 3 children will be exempt because multiple births after 1 child treated as single only. So LTA for all the children can be exempted. LTA for Balaji and his wife also can be exempted. Yes or no? Now pay attention. Cost of air tickets. Cost of air tickets, economy class, reimbursed by the employer, 30,000 for adults and 45,000 for 3 children. Can I say the entire benefit will be exempted? 30,000 plus 45, 75,000 LTA received. Now exempt under section 10(5). How much? Actual amount 75. Actual amount spent. The cost of the ticket was 75 only, which he had spent, which got reimbursed. Yes or no? So 75,000 actual amount also. And maximum limit as per rule 2BA. Do you remember that? Economy class airfare. So what was the economy class airfare? 75 only, no? So 75, 75, 75. Whichever is lower, 75. How much you have received? 75. How much will be taxable? Nil. Entire LTA will be exempt. Got it? Next one. Balaji is eligible for availing exemption in this year to the extent it is permissible in law. Very good. He is eligible to take the exemption. He took the exemption, and what is the amount? Nil. Compute the salary income chargeable to tax in the hands of Mr. Balaji, assuming that he exercises the option to shifting out, meaning not following 115 BSc. Yes or no? On your calculators, come on. Take your calculators. Take 6,50,000 basic as taxable. 2,60,000 as taxable. Take 70,000 as taxable. Okay. Then take 26,000 as taxable. See, if you take the DA not in terms, then 26,000 is taxable. But if you assume that DA is not in terms, in terms, then your amount here will be nil. Excess contribution will be nil. Then 26,000 will not be added. Okay, no? Hello. Next one. 2,000 rupees. Employer paying your professional tax is also your income. Add 2,000. Then add nil. Then add 12,000. Then add nil. On your calculator, how much amount you are getting? Tell me. 10,20,000, everyone getting that? Out of that 10,20,000, you are going to get first deduction 50,000 standard deduction. Reduce 50,000. Then second deduction entertainment allowance you are not going to get because you are not receiving entertainment allowance also. If you would have received, still you would not have got because you are not a government employee. Can you get the professional tax deduction? Yes, 2,500. Reduce 2,500 also. So out of 10,20,000, reduce 52,500. How much you are getting? $10,20,000 minus 52,500, you will get 9,67,500. Everyone getting this? Please check the final answer. Final answer 9,67,500. Are you all getting it? Can you see? This is your question number 4. And final answer is 9,67,500. And see, here they have also charged 26,000, meaning that it is assumed that DA does not form part of salary for computing retirement benefits, meaning that the assumption is DA not in terms. If you assume that DA in terms, then in your calculation here 26,000 will not come, and accordingly the amount will change. Yes or no? Then 9,67,500, 26,000 more. So 9,67,500, 26,000 will be 9,93,500. In that case, your taxable salary will be 9,93,500. Getting my point? Should I move ahead? Question number 4 done. Next one. Come to question number 5. Question number 5. From the following details, find out the salary chargeable to tax. You are supposed to calculate the salary chargeable to tax, meaning after deduction and everything, net salary for the assessment year 25-26. Assuming that the assessee exercises the option of shifting out of 115 BAC, meaning 115 BAC is not followed Okay. Now, Mr. X is a regular employee of Rama and Company in Gurgaon, meaning that he is a non-government employee. He was appointed on 1st January 2024 in the scale of 20,000, 1,000, 30,000. Now, from this, I will have to first calculate his basic salary. So, from 1st of January 2024 till 31st December 2024, his basic salary would be 20,000 per month. If nothing is mentioned that at the time of joining how much his salary was fixed, I will consider that in that scale the minimum salary he is getting at the time of joining. Yes or no? So when he joined, his salary was fixed at 20,000. Done? So this 20,000 salary he is getting. In the second year of his service, which will start from 1st January 2025 and it will be till 31st December 2025, he will be given an increment of 1,000. See, 20,000, 1,000, 30,000 means 1,000 rupees increment. Meaning that for next year of his service, he is going to get 21,000 per month as salary. Okay, 21,000 per month. So can I say my April month will come here? 1st April 2024 will be between any of these 2 days, and 31st March 2025 will be between these 2 dates. So my previous year is this. So in my previous year, can I say from April to December his salary is 20,000. So 20,000 into 9 months. And from January to March, meaning 3 months, his salary is 21,000. And if nothing is mentioned, we are going to assume that the salary becomes due as on the last day of each month. Yes or no? So 20,000 into 9 will give me 1,80,000, and this will give me 63,000. So total is 2,43,000. Everyone got this 2,43,000? Okay. So I will say that 2,43,000 basic salary taxable. Now 10% is DA. And if nothing is mentioned, DA can be in terms, that can be not in terms also. Yes or no? So we will say that DA is in terms. We will assume DA in terms. Okay. So 10% will be 24,300, and that is DA, that will be taxable. Now bonus equivalent to 1 month pay. Bonus equivalent to 1 month pay based on the salary of March every year. Now tell me, this year March salary was how much? This year March salary was 21,000 only, no? So March month salary, basic salary will be given as what? Bonus. So that 21,000 will be the bonus for this year, and that will be taxable. Now this information is important. This one. He contributes 15% of his pay and DA towards his RPF, and the company contributes the same amount. Now see, wait. This is a hint that DA is provided in terms. Because if the employer is contributing the same amount which you are contributing, and how much you are contributing? 15% of your basic and DA to your provident fund, RPF, and the employer is also contributing the same, meaning he is also contributing 15% of your pay and DA. Don't you think provident fund is a retirement benefit? And for the purpose of retirement benefit, whatever salary is taken, and in that salary, if the DA forms part of that salary, meaning that the DA is given in terms. Hello sir, getting my point? So DA is in terms, this is a hint. Hence we are assuming that DA is in terms. Understanding? Sure? Okay. Now see, this is employees' contribution. employee's contribution is how much? 15% of his basic and DA. So what is basic and DA? 2,43,000 plus 24,300 will be 267,300 and 15% of that will be 40,095. This is the employee's contribution. From where he will contribute this? From his salary only he is going to contribute. So salary is already getting taxed. So no need to give second effect to this under salary head. What we are going to do? We are going to take deduction of this amount under section 80C. From GTI we will take this as a deduction. But is your employer contributing the same amount? So can I say even the employer's contribution to your RPF will be 15% of your pay and DA? Yes or no? And employer is also going to contribute 40,095 only. But how much the employer can maximum contribute? Employer can contribute 12% of your salary. So the maximum amount which the employer can contribute is 12% of salary, not pay and DA, salary. If I would have been your examiner, no, what I would have done, in that DA, I would have told 50% in terms, 50% not in terms. So while calculating 15%, you are supposed to take full DA. Hello? Because it is 15% of pay and DA. But while calculating 12%, you should be taking only DA in terms as a part of salary. Getting my point? Everyone? So, what do I do here? 12% of basic. 2,43,000 plus DA in terms. Fortunately, entire DA is in terms. Yes or no? 24,300. And turnover commission, which happens to be nil. Now tell me, fortunately this amount is also same as the earlier amount. This and this will be same. Getting my point? What if DA, out of this DA, half was in terms and half was not in terms? Then here you would have taken only the half DA, which is in terms. And turnover commission was also given in the question. Then here the turnover commission would have been taken. So basic, DA in terms, turnover commission, add all of them. 12% of that is the maximum limit. Done. Maximum students commit mistake in these type of things. Will you commit? Or you understood what is to be done and what is not to be done? Sure, no, everyone? Okay. So tell me, this will be how much? 32,076. Your employer can contribute maximum this much. And he is contributing this much. Is he contributing excess? Is your employer contributing more than 12%? Yes. How much? This minus this. You will get 8019. 8019 is the excess contribution by the employer to your RPF. So what I'll do here, 8019 is the excess contribution by the employer that will be taxable. Sure. Next one. Now DA forms part of pay for retirement benefit. See, they have also said this. Did you see? In the question only they have written DA forms part of retirement pay. And that is the reason why employer is also contributing 15% of your pay and DA as his contribution. Got it? Next one. He is provided free housing facility which has been taken on rent by the company at 10,000 per month. A non-government employee getting rent-free accommodation from his employer without furniture. Meaning he is getting rent-free unfurnished accommodation. So accommodation value has to be calculated without furniture and without any rent. Hello? And that value will be taxable. And that value should be 10%, 7.5% or 5%. No. Because the accommodation is not owned by the employer in a city where the population is more than 40 lakhs, more than 50. Accommodation is taken on rent by the employer and given to you. So for such type of accommodation, 10% of salary is taken, or actual rent paid by the employer, whichever is lower. So what we are going to do here, we are going to take for this housing facility, we are going to take 10% of salary, and for this we'll have to calculate salary also, or actual rent paid by the employer happens to be how much? 10,000 into 12, 10,000 per month into 12 months, which will be 1,20,000. Now we are supposed to first calculate this salary, and based on this salary we are going to get this amount also. But till the time the entire question is not solved, we are not going to be able to calculate this salary also. So first let us complete all the other things, then again we'll come to this part and we'll value this perquisite. So this perquisite will be calculated in the end. I will come and put that amount over here. Okay. Next one. Come on. Facility of laptop costing 50,000. 50,000 cost was there for the laptop, and that laptop is given to you. Is it sold to you or given to you? Facility of laptop means use of laptop. Use of computer laptop whose cost is 50 will be a fully exempt perquisite for you. So ignore this cost and take the benefit as exempt, nil. Yes or no? Next one. Company reimbursed the medical treatment bill of his brother of 25,000 who is dependent on him. Hello? Medical treatment bill for dependent brother will be exempt perquisite provided the treatment is done in India in GRE. Treatment is done in India. But are they telling you that this treatment is done in GRE, government hospital, recognized hospital, employer hospital? No. Then this benefit will be fully taxable. Even if it is for a dependent brother, it will be fully taxable. How much will be taxable over here? 25,000 will be taxable. Yes or no? Next one. The monthly salary of 1,000 of housekeeper is reimbursed by the company, meaning that housekeeper was engaged by you. Domestic servant was engaged by you. And his monthly salary of 1,000 multiplied by 12, 12,000 was reimbursed by the employer, meaning your obligation met by employer. Clause 4 perquisite, even if you are a non-specified employee, will be taxable for you under clause 4. Hello sir, understanding? So come on, next one. So 12,000 will be taxable here. Got it sir? Now a gift voucher of 10,000 on the occasion of his marriage anniversary was given by the employer. So this 10,000 will also be taxable as your perquisite. Conveyance allowance of 1,000 per month is given by the company towards actual reimbursement of conveyance spent on official duty. Wait, conveyance allowance is given equal to the amount spent on conveyance while you are on official duties. Hello sir. Allowance, conveyance allowance received will be exempt to the extent spent under section 1014. Do you remember? You are getting only that amount which is spent by you. Hello? So amount received is spent will be fully exempt. So the amount which is spent only you are receiving fully exempt. No? Hello? Under which section? 10 subsection 14. And see, this 1014 exemption will be available even if you follow 115 BSc. Traveling allowance, daily allowance and conveyance allowance will be exempt under section 1014 under both the regimes. If you follow 115 BSc, then also they are exempt, and if you are not following 115 BSc, then also it is exempt. Hello? Everyone got it? So how much will be exempt? 1,000 into 12, conveyance allowance received. And this entire amount was spent only, that which you are receiving, no? So fully exempt. Nothing will be taxable over here. Nil. Next one. He is provided personal accident policy. For that personal accident policy, premium of 5,000 is paid by the company. So any personal accident policy premium paid by the employer for you will not be a perquisite for you, will be fully exempt. Yesterday only we have had this discussion. This will be fully exempt. Nothing will be taxable. He is getting telephone facility or telephone allowance. If you would have got this telephone facility, meaning perquisite, then the amount would have been fully exempt. Mobile bills, telephone bills paid by the employer, reimbursed by the employer, telephone facility given, mobile facility given by the employer, then it would have been fully exempt. But is it a telephone or mobile facility or telephone or mobile allowance? Allowance. It will be fully taxable. 500 into 12 will be 6,000. So have you received all the amounts? Now only one thing is pending, RFUA, rent free unfurnished accommodation. For that RFUA you need salary. So in your salary, now keep on telling me, will you take basic? Yes. Will you take DA? Yes. If it is in terms, DA not in terms, not to be taken. So DA in terms is there, no? So we'll take DA in terms. Then will you take bonus? Yes. Will you take employer's contribution 8019? No, 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 no. To value the perquisite RFUA, the salary does not include what? Employer's contribution to PF, which is 8019. Will you take it as a part of this salary? No. So to calculate this 10%, we are calculating the salary, and in that salary, you will take basic, you will take DA in terms, you will take bonus, but you will not take employer's contribution to provident fund. And also you will not take any other perquisite, value of any other perquisite you will not take. Hello sir, value of other perquisite, but you will take the taxable portion of allowances. Exempt portion of allowance you will not take, but taxable portion of allowance you will take. So whatever tick marks are there, add all of them, you are getting what? Salary. So how much salary? 294,300 you should get. Please check. 2,43,000 plus 24,300 plus 21,000 plus 6,000. You are going to get 294,300. So this is your salary. 294,300. 10% of that will be how much? 29,430. So 29,430 or 1,20,000, whichever is lower, tell me. 29,430 will be the lower amount, and that is your RFUA, rent free unfurnished accommodation. The taxable value of that perquisite will be 29,430. Yes or no? Now on your calculators, add all these amount. Now you will take 2,43,000 plus you will take 24,300 plus you will take 8019 plus 29,430 plus 25,000 plus 12,000 plus 10,000 plus 6,000. You are getting 357,749. Getting this amount or other amount? Wait, how much? 2,43,000 plus 24,300 plus 21,000 plus 8019 plus 29,430 plus 25,000 plus 12,000 plus 10,000 plus 6,000. 378,749. 378,749. Okay, 378,749 will be your gross taxable salary. Are you following 115 BSc? No. So you will get 50,000 standard deduction also. No entertainment allowance deduction, no professional tax deduction. Okay, so reduce 50,000. You will get 3,28,749. This is your net taxable salary. Please check the solution. Final answer. $328,749. Got it, sir? Easy. 4 or 5 places are there in this question where you can commit mistake. 1. That basic salary calculation. 2. RFUA calculation. 3. Employer's contribution to provident fund. Then 4. Conveyance allowance. You did not get what it is actually. Okay. And one more place where you can commit error is, no, there is no other thing where you can commit mistake. So these 4 places are there in this question where you can commit mistake. You might have done any one of these mistakes, I guess. Understood the entire question? Understood the entire solution? Okay, let's start with the 6th question. See, you are required to compute the income from salary of Mr. Raja under default tax regime, meaning that Raja is following 115 BAC. You have to be careful now. Okay. See, he retired on 31st of December 2024 at the age of 60 after putting 25 years and 9 months of service from a private company at Delhi. Okay. He was paid a salary of 25,000 per month and HRA of 6,000 per month. Can I say 25,000 per month salary, basic salary, he is going to receive from April to December only. 9 months, because he is retiring on 31st December. So 25,000 into 9, he will get 2,25,000 as basic salary. That will be fully taxable. Now, is he receiving HRA also? Yes, sir. He is receiving 6,000 rupees as HRA. 6,000 into 9 will be 54,000 HRA. And under the default tax regime, HRA exemption under section 1013A is not available, meaning that entire HRA will be fully taxable. Getting my point, everyone? So here it will be 54,000 HRA fully taxable. Now today at home, you are supposed to solve the same question, assuming that he is shifting out of 115 BSc. And in that case, you will calculate HRA exemption also. Hello, sir. But here we are not calculating HRA exemption. Why? Because he is not following 115B, sorry, he is following 115 BSc and his HRA in that case is fully taxable. Okay. So the rent paid by him during his tenure, service tenure will be irrelevant for us. Next one. On his retirement, he was paid gratuity of rupees 3,50,000. And he was covered by payment of gratuity at 1972. He had not received any other gratuity at any point of time earlier other than this gratuity, meaning that full 20 lakh rupees of limit of gratuity is available to him. Yes or no? So can I say, if I'll calculate the gratuity exemption, so the amount of gratuity which he is receiving is 3,50,000 and he is covered by POGA, meaning that he will get the exemption under section 1010 amounting to how much? A. Actual gratuity received. B. Full limit of 20 lakhs because he has never claimed this exemption earlier. Yes or no? And C. Now 15 by 26 of last drawn salary per month for 26 years of service. 25 years, 9 months will be taken as 26 years. Getting my point? And last drawn salary will take basic of last month as well as DA of last month. No DA is there, sir. Only basic is there. So entire basic will be his last drawn salary. So what was the basic in the last month? It was 25,000 only, no? Getting my point? So it will be 25,000 into 26 years. So 25,000 into 15. Because 26 will get cancelled. Okay, no? 3,75,000. Now tell me, which is lowest out of all? 3,50,000 is lowest. So 3,50,000 will be exempt. Tell me, how much is the taxable gratuity? Nil. So here I will say his taxable gratuity will be nil. Done? Next one. He had accumulated leave of 15 days per annum. Accumulated leave of 15 days per annum. How many years he is working? 25 years, 9 months, ignore 9 months. For completed 25 years. Every year he has accumulated a leave of 15 days. Meaning leave saved every year. 15. Leave allowed minus leave taken. Accumulated leave 15. Leave allowed minus leave taken. 15 accumulated leave for all the years of his service. So can I say 15 days per annum, meaning that 15 into what? 25 years will give 15 into 25 will give 375 and that I divide by 30. So 375 divided by 30 will give me 12.5 months. So leave credit, leave balance, accumulated leave at the time of his retirement is how much? 12.5 months. And for this 12.5 months, he is getting a leave salary of 3,15,000. 3,15,000 is his leave encashment at the time of retirement. Hello, sir. Now this 12.5 months, meaning that this 15 days is based on leave allowed by employer 30 days. So every year employer was allowing 30. Out of that you were taking 15 and 15 days was saved. Next year also 30, you were taking 15 days leave, 15 days saved. Likewise, for 25 years, 30 days leave allowed, 15 days leave taken and 15 days leave saved. Getting my point? So 15 days leave saved multiplied by 25 years will give you what? 375 divided by 30, it will be 12.5 months leave credit. And for this leave credit, he is getting a leave salary of 3,15,000. But wait, this is the leave credit as per employer's rules, which was allowing you 30 days. What would have been the leave credit if you would have calculated that leave credit as per IT rules, leave allowed? IT rules leave allowed is also 30. So based on that, the leave credit would have been same, no? 15 days every year, meaning that 375 days, meaning that 12.5. So this 12.5 is as per employer's rule also. This 12.5 is as per IT rules also, meaning that for the purpose of claiming the exemption also, I will take the same leave credit. Getting my point? So now tell me, 3,15,000 was your leave credit on leave salary on retirement. Will it be exempt? Yes, it will be exempt under section 1010AA. How much exempt, sir? A, actual leave salary. B, maximum leave leave salary allowed is 25 lakhs, maximum limit. C is 10 months salary. For that, I will have to take the average salary of last 10 months, including the month of retirement. So month of retirement is December, this month and earlier 9 months. All the months, I will have to take basic DA in terms turnover commission. 10 months salary divided by 10, I will get average salary. That average salary multiplied by 10, yes or no? So 10 months salary, meaning 10 months average salary. 10 months into average salary. So what is the average salary? Basic DA in terms turnover commission of the last 10 months divided by 10. What was the basic in last 10 months? 25,000 into 10, 2,50,000. What was the DA in terms? Nil. What was the turnover commission? Nil. So 2,50,000 plus nil plus nil. Total 2,50,000 divided by 10 will give you average salary also 25,000 per month. Hello, sir. So that will be 25,000. And now D is leave credit, which was 12.5 months into 25,000 per month. This will be 2,50,000. This will be 25,000 into 12.5. This will be 3,12,500. Whichever is lower. Come on, tell me. What is the lowest one? 2,50,000 is lowest. So out of this, 2,50,000 will be exempt. So 65,000 leave encashment or leave salary will be taxable on retirement. Yes or no? So I will write down 65,000 over here. How many of you committed mistake here? Understood what mistake was there? How many of you did mistake in gratuity? I guess nobody would have done. Gratuity was correct. Or gratuity also committed mistake? No, na? Very good. Okay. He is receiving 5,000 as pension. On 1st February 2025, he commuted 60% of his pension and received 3 lakh as commuted pension. Please pay attention. 5,000 per month he will get for January. only 1 month. So this is uncommuted pension for the month of January. And February and March also, he was supposed to get 5,000 per month also only. But he commuted 60% of this for a lump sum of 3 lakhs. Meaning that now for the month of February and March, he is not going to get entire 5,000. He is going to get only 40%, which is still uncommuted. Yes or no? So into 40% into 2 months. So it will be 5,000 into 40% will be 2,000 into 2 will be 4,000. So 5 plus 4, 9,000 will be his uncommuted pension, which will be taxable here. 9,000 uncommuted pension taxable. Done? Now, is he receiving 3 lakh rupees commuted pension? Yes, sir. So now commuted pension 3 lakh rupees he is receiving. And do you remember commuted pension is exempt under section 1010A? How much is exempt? A, actual amount of commuted pension, or B, maximum 1/3 of fully commuted pension. Why 1/3, sir? Because on retirement is getting gratuity also. So a non-government employee on retirement who is receiving what? Gratuity also, his commuted pension will be exempt to the extent of maximum how much? 1/3 of his fully commuted pension. So tell me, 3 lakh is received after commuting 60%. So is this 3 lakh fully commuted or partly commuted? Partly. So if on 60% commuting you are receiving 3 lakh, how much will you receive if you commute entire 100%? So can I say 3 lakh divided by 60 into 100 will be your fully commuted pension. So this will be 5 lakhs. 1/3 of 5 lakhs will be 1,66,667. Everyone got this? So either 3 lakh or 166,667, whichever is lower. So this amount is lower. Out of 3 lakh, this amount will be exempt. So the taxable amount will be 1,33,333. Everyone got this? Anyone committed mistake here? No one? Sure? So I will write down 1,33,333 as what? Commuted pension, which is taxable. And how I am deriving these taxable amounts? That you just have to show in the calculation. That's it. Okay, no? Very good. Now the company presented him gift voucher of 5,000 on his retirement. Is the amount more than 5,000 or only 5,000? Only 5,000. So any gift in kind up to 5,000 is not taxable coming from the employer. Yes or no? So nothing will be taxable. No gift will be taxable. But his colleagues also gifted him mobile phone worth 50,000. Colleagues means the gift is not coming from the employer, so this cannot be income from salary. But it can be income from other sources. But under income from other sources, it will not be taxed because gift of mobile phone is not a specified asset. And also the amount of gift is not more than 50,000. There are two reasons why this cannot be income from other sources also. First, this is not a gift of specified movable asset. Second, the amount of gift taxable under the head IFRS will be only when that amount is more than 50. But it is not more than 50 also. So this will not go to IFRS. Nothing will be taxable in IFRS. This gift is fully outside the income tax net. So if someone wants to give you a gift, ask the gift of any asset which is not a specified movable asset, and tell that person to give you the gift which is not more than 50,000. Only then that gift will not be treated as your taxable income under the head IFRS. Yes or no? Sure? Okay, very good. Now the entire thing is done. Now do one thing on your calculator. Take 2,25,000, 54,000, nil, 65,000, 9,000, 133, 333. Add all these amounts. 2,25,000 plus 54,000 plus 65,000 plus 9,000 plus 133,333. 486,333. Everyone getting this? So that 4,86,333 is your gross taxable salary. And out of that you are going to get only one deduction, that is 75,000 standard deduction. Reduce 75,000, you are going to get 4,11,333. Got it? Please check the answer. 4,11,333. Are you getting this or not? Sir, 4,11,333. Final answer. Sure, sir. Now wait. The answer to this question will change. This amount will change if you follow 115 BSc. Sorry, if you don't follow 115 BSc, because this is 115 BSc, no? How that will change? Please pay attention. See here. Basic salary will remain same. But now this 54,000 HRA will not come. You will get the exemption. Let's calculate that also. Sure? Okay, let's calculate. HRA, tell me, if I say 54,000 HRA received, out of that 1013A exemption will be available if you don't follow 115 BSc. How much will be exempt? A, actual amount 54,000, or B? Sir, for B, I have to take 50% of salary or 40% of salary depending on the fact that where I am paying rent. Sir, I am paying rent in Delhi. See, the employee is living in Delhi, paying the rent in Delhi. Given in the question, yes or no? With HRA point only they are saying that he is paying 6,500 rupees per month as rent in Delhi. Did you see that? Yes or no? Tell me. Did you find Delhi anywhere in the question? Got it? No. It is given in that HRA point only. He is paying 6,500 per month in Delhi only. So rent is paid in metro. And if rent is paid in metro, the limit B will be 40% of salary or 50%. This will be 50% of salary. And for this salary, you need basic DA incomes and turnover commission for becoming due in all those months in which you have paid the rent. So for how many months you have paid the rent? April to December. So April to December, whatever salary becoming due, meaning whatever basic, whatever DA incomes, whatever turnover commission becoming due. Turnover commission, nothing. DA incomes, nothing. Turnover commission, nothing. DA incomes, nothing. But basic is there, no, in these 9 months. How much? 2,25,000. So 2,25,000 plus 0 will give you 2,25,000 salary. And 50% of that salary, 2,25,000 divided by 2 will give you 1,12,500. Everyone got this? And C will be rent paid, which is 6,500. That you have paid for 9 months. Yes or no? 58,500. Minus 10% of salary. 10% will be 10% of 2,25,000. 10% of 2,25,000. So that will be 22,500. So 58,500 minus 22,500 will give you 36,000. A, B, C, whichever is lower. Come on, 36,000 will be exempt out of 54. So your taxable HRA will be only 18,000 in that case. Sure? And this will be only done if you are shifting out of default tax regime. So here your answer will change and it will come to 18,000 if you don't follow 115 BSc. Yes or no? So only this will change. This will remain same. This will also remain same. This 9,000 will also remain same. This will also remain same. This will also remain same. This will also remain same. Nothing will change. Only that HRA part will change. So now can I say This 486 will also change. So 486, 333, in that you have added 54, no? So reduce 54,000 and add 18,000. Your salary in that case will become 4,50,333. And now you are going to get a standard deduction of 50,000 only. Hello, sir. So tell me, your salary will be 4,333. This will be your final taxable salary. Got it? So the same question can be solved in two ways. One way you have solved, and second way I have solved here with you. Done?